The thing that's still the scarce resource is entrepreneurs. What happened during the bubble was the kind of momentum entrepreneur sort of forced out what we would call the traditional entrepreneur. And now we're seeing the reawakening and sort of coming back into favor of what we call the traditional entrepreneur, someone who is going to build a company, kind of come hell or high water, who's not trying to flip something, who doesn't expect to get liquidity in 3 to 5 years, who wants to stay with the company well after the IPO.
There are certainly venture capital funds that have a lot of overhang from bad investments, and they're having a hard time. Honestly, today I think I'd rather be an entrepreneur. It's such a great time to start a company. But it's always nice to be the person holding the purse strings.
We're going through a change with people's having to rethink again of what they should be funding. I think there was too many investments being made in companies that, because of the boom that we had, that traditionally should not have had funding. So I think a lot of the venture capitalists are having to go back to square one and rethink it again and think how they are going to face the future with new fundings.
Hard to predict where it'll be, but I would say that it will continue on the path it was on in the mid-90s and the period before that, which is growing at a steady pace, becoming a bigger and bigger part of economic value creation, but without the type of sudden meteoric rise or meteoric fall that we saw in the late 90s.
I've been in the venture capital business for over 20 years, and before that I spent about 10 years in the technology world. And I just think that venture capital is the most exciting industry one could work in. I have to say that working with some of the smartest people in the world, some of the most talented people of the world, creating new companies has been an incredible joy for me for 20 years, and I hope to be here another 20.
The value proposition is you have business processes in your company that are wasteful today. Now, it's very, very hard for you to earn revenue, and you desperately want to convert that revenue into earnings, and you're essentially dribbling that revenue away. It's your money, and you're losing it every single day because you have wasteful, inefficient, or ineffective processes. And if you could just take some duct tape, I mean, it'd be nice to have a whole new PVC, piping system, but if you could just take some duct tape to some of those leaks, that would fall right to your bottom line. And we're the folks with the right duct tape. So that's what we're selling in, essentially in 2002, duct tape.
The value that I'm getting out of this conference is twofold. One is certainly in terms of the networking with my industry peers, but more importantly also I'm getting exposure to a number of the MIT professors as well as other faculty and the students, and a number of these students have very, very innovative ideas.
The conference has grown in importance every year, not just because venture capital itself has grown and is currently contracting, but because the sponsorship level of the conference has been immense.
It's actually one of the largest events in the venture industry. This year I actually have over 70 speakers, about 400 attendees. Just a tremendous opportunity for students as well as professionals to kind of get an interest in the MIT and entrepreneurship communities.
So we covered things along the lines of what is a VC, how does one get into VC, what's the background of a particular speaker who happens to be a VC, what are the key success factors of these particular venture capitalists, and how do these vary across different venture capital firms.
This conference is extremely useful because we're putting that money into the venture capital industry, and this is one of the best places to cross-fertilize with both a number of very attractive venture firms as well as the students that are looking for jobs and are interested in that arrangement, as well as the other people that are investing in the industry. So you end up having a refreshing frankness and some real value added in terms of the ability to learn about the industry in this kind of an environment.
This is the first time I've come to the conference, and I think it's fantastic. I really was not expecting that most of the best venture capitalists from around the Boston, New England area are here, or certainly many of them are here. There's some great entrepreneurs. The quality of the students at Sloan is so high, so you have all this energy of the students thinking about the next companies. Sloan and MIT have such a strong tradition of entrepreneurship. Today at lunch we had Bob Langer talking about how he starts companies. It's just fantastic, fantastic conference.
VCs such as myself get 1 year older every year. What is wonderful about a conference like this is the conference does not get 1 year older. And so continually reconnecting with experiences with the next wave. You get locked into your own generational point of view. There's no way out of it. But by interacting with another generational point of view at the intersection where the experience and the novelty can hit, that's where you find innovation. It's where investment comes from.
In addition, by being associated and affiliated with MIT, we also get recognition within the ranks, both now as well as over time, as a firm that is a good firm to go to for early stage investment opportunities.
I'm delighted to be at the conference again this year. I was here last year and was very impressed. I was very impressed with the quality of the speakers. I would have thought that VC firms in Europe could learn a lot from this conference. The quality of the speakers are outstanding. The keynote speaker this morning was terrific, Geoffrey Moore, and indeed last night we had Howard Anderson, who was a real uplifter and a positioner of where the markets are right now, and what are the actions VCs should be taking. I think European VCs could learn a lot from this conference. It must be one of the top events, I think, on the East Coast. Certainly it's relevant. I've been at large conferences, I better not name them, in New York and elsewhere, but as far as relevance in a very succinct one-day event, I think this is actually outstanding.
Many business schools have conferences, but I'd have to say that Sloan's conference is at a level that even exceeds many professional venture capital conferences. The quality of the speakers, I think the diversity among the panelists, and the effort that goes into making sure that each panel really is relevant for the environment currently and will be relevant in the near future, sets it apart quite a bit.
You don't need a lot, but you need essentially to go find companies and start companies that are going to be attackers. We have in the venture industry money. We're sitting on about $230 billion. We want to invest in new things. We don't know exactly where they're going to be. Don't wait. The great thing that we've learned about entrepreneurs is you don't have to wait in line. When you have a good idea and you have some experience, it's time. If your heart is set on working in the venture industry, this may be about the hardest year I have ever seen. On the other hand, get to know these people, go find real companies, get some experience, because when the industry turns, you want to have some line operating entrepreneurial experience. You need essentially to go ahead and say, I'm going to do it, I'm going to go build a company, I'm going to be a part of a team that builds a company. Then and only then, I think, that you've got some of the judgment that venture capitalists need. And then probably, if your timing is perfect and you're a true contrarian, the industry starts to grow again at flying speed.